name is Keith Hull. Welcome to another NASE Minute. Today, I want to talk about estimated tax payments. The question is, do you really have to make those quarterly estimated tax payments? Well, you may be surprised, but no, you're not required to. No one's going to call you, no one's going to send you a reminder email. You don't get a bill from the IRS, so you don't really have to. Now, I say that tongue-in-cheek because if you don't make those payments, it's going to cost you. So really the question is, how much should those payments be? Certainly make them, but always make as little as possible to avoid any underpayment penalties. So don't give your money to the IRS any faster than you have to, but certainly don't incur any penalties. So the IRS has 3 safe harbors that you can go by and avoid any penalties. The first one is if you pay in at least 100% of your tax from last year, you'll have no penalties and no interest. Second, if you pay in at least 90% of what you end up owing, you'll have no penalties and interest. So it's kind of like just getting close. The IRS knows it's an estimate, so if you get close, that's okay. And last, if you end up owing less than $1,000, then you'll have no penalties. Also kind of a get close. Now that first method, paying in exactly what you had last year, is the easiest. You've got last year's tax return, you know exactly the total tax that you paid, not the amount you had to write a check for, but the total tax on your tax return. Divide that by 4, and that's your quarterly payment amount. The second option, a little more difficult because you don't know what those numbers are going to be yet. So take out a piece of paper, a pencil, do a little bit of math, and estimate what your taxes are going to be for the coming year. Once you get that total, divide by 4, and now you have an estimated total. So you have 2 options there. One, the first one, should be used in years that you expect your earnings to increase. So you don't want to pay money in faster than you have to, but you want to avoid the penalties. The second option is for years that you expect your earnings to be lower, because you don't want to pay in more tax than you have to, so use that second method if you expect your earnings to be somewhat lower. So again, make sure you do consider making those quarterly payments. You don't want to borrow money from the IRS. So figure out the least amount possible and make those payments. And always remember, you're not alone.